Hey traders, good morning. This is our weekly market trading preview and analyses. And it is for the week of Monday, October the 31st, last week of October, and Halloween. Let's go ahead and jump right into it and take a look at what we've got for the week. We start off with looking at a bigger picture here on our technical analyses. Again, for those of you that are new to these analyses, we do look at these 12 major technical indicators as well as the dual overlay of anything from a 5 out to a 200-day moving average, both simple and exponential. And then we look at the pivot points that we get as well from that as a big demarcation point in the marketplace. We look at those on a daily basis as we trade live in the trading room. But this is a little bit bigger picture. This is a 30,000 foot view, and this is our weekly numbers. And for those of you, again, that have traded with me in the past, you know that I generally do not like what we're getting here right now, which is basically a neutral rating on the bigger term picture. We've got some moving averages that are still kicking in, giving us a buy signal here. We were stopped pretty heavily at the 50-day moving average. There's also some pretty big demarcation points with Fibonacci numbers at the 50% retracement levels. And so we've got some mixed signals right now for the overall week. We'll get in, obviously, to our news catalysts here in just a second, but of course we have FOMC minutes and Powell speaking on Wednesday, and that's probably going to be the main driver for the week. We have some stuff coming out on Thursday and Friday as well that could be a catalyst to move the marketplace, but really this week is all about the Fed. And so this doesn't help in terms of trying to get a really solid read on the marketplace when we have an overall neutral rating on the marketplace. But we'll try to take a look at some levels here and see what we can find in terms of demarcation points. I use the E-minis. I use the futures contract here to do my analyses simply because I think it has a little bit better continuity. There is about a 10 or 11 point differential right now between the futures contract and the actual SPX underlying. So you need to take that into account when we're talking about bouncing back and forth between the SPX numbers and the E-mini futures contract. But for right now, a couple of things that I note on the chart. Obviously, a couple of things that stand out to me that are pretty, I think, clear to see on this chart. This red line right here, this is our point of control. This gray line right up here is our VWAP. And both of those levels are creating quite a bit of overhang in this marketplace. I had talked about sitting down here on this cliff for quite a while. Well, we've certainly launched off of the cliff to the upside, and I mean dramatically. But the point that you're starting to see our indicators now really implies, again, is reflective of that overall neutral rating. That's pretty much what you see no matter what technical indicators you put on your chart right now, that we are moving back to that neutral rating, which I guess you would imagine would be logical as we enter an FOMC week and the market sort of stalls out waiting for that decision on Wednesday. There's a couple of levels that I'll share with you that I think are important for me as we look at these numbers. Number one is point of control. So I'm looking at the futures market right now, Monday morning. We're down about 21 points. The E-mini is at 38.90. So 38.90, we've broken down below the 3,900 level, which is important. That's a big level, but we're at 38.90 right now. Point of control is 39.32. That would be a big level if the bulls were able to get to 39.32 and push above that. Some of my other fib lines that are major demarcation points for me: 39.52, 39.77, 40.92. That would be the next big fib line up above. And then on the downside, from a support standpoint, 38.55 is a major level, and 37.25 is a major level. So those are all of the major levels that I am looking at in the marketplace. If we look at intraday information, so this would be just overnight information. This is overnight information that is really what kicks us off and gets us started on the day. For resistance, it is that, of course, 3,900 level. That's a big level. 39.25 is the next level up. 39.65 is the next level up over that, and then 4,000. That's a huge level. So these are all overnight levels that I was looking at. From a support standpoint, this would be resistance right here. From a support standpoint, again, that 3,900 level is critical. We'll see what we do here at the open, but again, right now down 21 points at 38.89. We are below that critical 3,900 level. 38.85 down below that one. 38.55 would be my next level down there. 38.25 is the next level down below that. Then, of course, 3,800, that is a huge, huge level. And really, below 3,800, there's some levels in there, but really you get to the next major level, which is 37.25. So I think if the bears can break back down below 3,800, which is about 88 points lower than where we're at right now, they get back in charge. But of course, again, we have FOMC coming up, and that's going to be a big factor. So, again, not a lot to look at on the charts right now. We generally have neutral ratings just across the board on most of our technical indicators. We're pushing up. Obviously, the trend has been massively to the upside. We'll look at some numbers here in just a second. It has been very, very impressive what the bulls have been able to do over the last couple of weeks. But we're sitting at some very big, again, demarcation points. You can go all the way back here to May of this year, and you can see over and over again how this has been a huge level. We always talk about how you found a good demarcation point, a good level, when support becomes resistance and resistance becomes support. It acts almost like a magnet around that market. And that point of control that we talked about here at 39.32 on the E-minis, that's a huge, huge level. So we've got a lot of upward resistance hitting above us here. But again, it's all really determinant on what the Fed does on Wednesday and how the market reacts to that. We'll talk a little bit about the market reaction. This past week we had pretty much poor earnings across the board. Some pretty heavy names: Amazon, Microsoft, Meta, a bunch of tech companies reporting very poor results, or at least they were taken by the market as being very poor results. We had a cooler than expected PCE number come out. We had lower than expected job numbers come out. You would think that all of those things would be taken as a negative. No, the market was pretty much a rocket ship last week, and especially if you take a look at the Dow. So a couple of items of note here. We do trade all four of these indices. We get this question all the time. What's the point in trading all four indices? Why don't you just grab the SPY or even the Qs or whatever? But no, they do tend to coalesce and trade in a similar manner over longer periods of time, 6 months or 12 months. But on a week in, week out basis, there are huge divergences between what these markets are doing. The IWM had a strong week. So did the SPY. The Qs were the ones that got hit obviously the worst there. Still an up week, but they got hit the worst with all of those tech earnings that just didn't seem to work out very well for them. What's interesting about the SPY is that it did pause right at that 50% retracement right there on the fib line. So that there's a lot of overhang just up above where the SPX, where the SPY is sitting. But if it can break through that, man, there's a huge gap, a huge vacuum area up to the next level. So that combined with the fact that we have a neutral rating going into this week, and we've got Fed numbers coming out on Wednesday, you've got a catalyst that is the fuse is now lit on the marketplace. And it's just really, I think, a question of whether it's going to explode to the upside or implode to the downside. But we talk about this all the time. There's only really two markets. There's expanding markets and consolidating markets. We're definitely in an expansion market right now. You can see that we are expanding pretty much across the board to the upside. The question is, how sustainable is that? And I think it really is an important question to ask about the DIA, the Dow. Granted, it's only 30 stocks, and so you do tend to get a little bit more erratic movements with that particular index versus the other major ones. But man, it has been on an absolute tear. And markets rarely maintain a trend like this. They'll have a reversal. Markets rarely maintain a trend like that. They'll have a reversal. We've been in a bullish pattern here for quite some time. We'll have to see if there's a continuation through through Wednesday or not. But man, it's been bullish as of late. If we look at our overall sector analyses, one of the things that we look at, this is from Friday, and again, man, our healthcare trade has just been kicking butt. It has just absolutely dominated. People ask, where do we find all these amazing trades? Well, this is a really good place to start your studies. Looking at the overall sectors in the marketplace, there is an ETF that you can trade that tracks all of these major sectors and what they're doing. The last couple of weeks here, pretty much everything has been green. Pretty much everything has been up. So we tend to look here for extremes. We look for something that is very oversold or something that is very overbought. We're not really seeing a whole lot right now as we look through all of the major sectors. Again, it makes sense. The overall market is giving us a neutral rating, and that's kind of what we're getting from most of these major sectors. We did have real estate for a bit that was looking very oversold, but it has bounced back as well now, and everything pretty much across the board is giving us some neutral ratings. So not a lot to discern or get from our sector analyses this week, other than it just confirms that the market really is in a consolidation or neutral mode right now. And again, I think probably Wednesday's FOMC meeting is going to be the catalyst that drives us. If we look at a heat map of the overall marketplace, you can see this was 2 weeks ago right here, and this was last week. Really two pretty darn solid weeks back to back in the marketplace. Last week it really was just these tech stocks that beat the market up pretty good. Apple bucked the trend quite well. Amazon is not considered a tech stock, but it seems to trade with them. And so we'll have to see how those rebound. We do have a trade that we put on based on this result with Amazon right now. We are trading Amazon, and we have had several trades in and out of Meta, which I think there's some good premium there. We've also traded Microsoft as well. Google is the only one, as well as Apple, that we haven't had a current trade on. But again, this is just like sector analyses, this is a great place to go. And with a very quick snapshot, you can find out where the price action is with all of these thousands of underlines that trade on the market, and specifically what sectors of the marketplace are performing quite well. If we look at the week over week results for these major indices, again, this would be 2 weeks ago, and this would be last week. There's not much you can say. It was just pretty much bullish across the board. The NASDAQ 2 weeks ago had an absolute just gangbuster, but it has really been this past week, it's been the IWM, which is very interest rate sensitive, and I think that that's part of the market rebound that we have had the last couple of weeks. IWM small caps, very interest rate sensitive. We have a bond trade on right now. We call it the falling knife trade, but bonds have rebounded quite nicely over the last week. That's been reflected in the overall market's anticipation, I think, which I believe they're going to be disappointed that the Fed might pivot. Boy, there's a lot of hope that the Fed's going to pivot, and I don't think there's any sign that that's going to happen. But nevertheless, bonds have certainly responded well after just being beat up forever and ever. That's helped the IWM index, and like I said, the Dow is just on fire right now. We gotta think at some point that trend stops. You can't have indices that are going up 5% a week for very long. That's not very sustainable for very long. But for right now, the Dow is absolutely crushing it to the upside. We do look at the put call ratio. There's several components that we try to look at or ferret out to give us contrarian indicators into the marketplace. We used to use the VIX a lot. The VIX is basically broken at this point, but we do look at the put-call ratio, and the put-call ratio is above 1 when we get put volume exceeding call volume, and it's below 1 when we have call volume exceeding put volume. So it is a market sentiment, and it's deemed bearish when that put-call ratio is high, and it's bullish when it's low. So we're trying to kind of look at that number 1 figure there and take a look at it. We haven't really had any substantive action on the put call ratio. We have spent a lot of this year trading options and almost being forced to enter our trades on the put side or the call side, not because we wanted to be on that side of the trade, but because that's where the premium skew lies. And that's where we had to go to find the premium, because the difference between those sides was pretty huge. The skew was big, let's put it that way. We haven't had that as of late. We've kind of just been meandering here around that that number 1 figure, or just slightly below that. Yeah, we rose a little bit over last week, but nothing really substantive to give us any idea that we're either really oversold here or really overbought, which once again, this buys into the theory that we're very neutral in our rating right now. Last week's expected move in the marketplace was about 114 points. It's slightly higher this week at 118 points. We really love it. Look, we spent a lot of 2021 in the 60 to 80 point range. So we're very grateful for everything that we can get. Obviously, as traders that primarily sell premium, the greater the expected move, generally the greater the IV, the implied volatility, and thus greater the premium that we can get on selling those options. So the bigger this number is for us, the better it is. We have had some 120 to 140 point expected moves, and those have been fantastic. But I don't know necessarily, again, how much I would read into that. I think it's very possible we could get a 118 point move just on Wednesday if the Fed does something unexpected. So again, take that with a little bit of a grain of salt. If you're worried about premiums drying up this week, I don't think that's going to be the case. Maybe we have some challenges today, Monday and Tuesday, as the market just kind of goes into neutral, waiting for that Fed announcement. But we got job reports and things later in the week. And then, of course, we got the Fed on Wednesday. So I think there's going to be plenty of juice for us to trade and find opportunities this week, especially with, obviously, Wednesday coming up. We look at a heat map. I love the visuals of heat map. I did put together, well, we'll take a look at it here in just a second. I thought it was my next slide, of the gamma walls, of where the big open interest areas lie. My software wouldn't pull up today's new numbers, so I'm still working with last week's numbers. But this is basically the same thing. It kind of gives you an idea of where all of the open interest orders lie, and those can act as support and resistance areas. And you can see that obviously down here. That was a pretty substantive support level. We had some pretty good levels coming down through here that did give us some support. And then I talked about this area for quite a bit over the last couple of weeks, how it was really a vacuum. It was a no man's land. And these vacuum areas, that's what allows a big move like that. That's what allows a big move to take place like that. The market abhors a vacuum, and it will try to push towards a support resistance area. Well, we're certainly back there again now. Again, we've talked about this level going way back here into May of this year. We're back here again at this sort of decisive area in here, and up against VWAP, up against the point of control, up against a 50% Fibonacci line. So there's a lot of things happening today that I think will potentially set us up for the move on Wednesday if we get it. But we'll have to see how that pans out. Right now, we're definitely out of that vacuum area and pushing back into a resistance area once again. Again, we try to look at some contrarian indicators, and the fear and greed sentiment reading is probably the best example of that because it takes the VIX. It takes the put-call ratio. It takes a lot of these things and it combines them into one index. And again, it is a contrarian indicator. So when everybody is buying, we should be selling. When everybody is selling, we should be buying. Well, you know, we've been bouncing around in this fear area or this extreme fear area for quite a while. No longer. Man, these last 2 weeks, everything's hunky-dory. Everything's fantastic. We're back up into the greed category. Just 1 month ago, we were down in here. Just a month ago. Boy, what a difference a couple of weeks makes, right? But again, this would imply right here that we are getting to be a little bit overbought. We are pushing up against a resistance area. So again, when everybody is greedy or has greed, you want to be cautious. When everybody is jumping out of buildings, that's probably the time to step in and start buying. It is a contrarian indicator that we look at. This is, again, a week-old data here. I couldn't get my software to pull the new one up, so I don't want to spend too much time on this other than to, again, just stress the levels that I talked about. That 4,000 level is a huge gamma wall. The 3,900 level, most all of these levels, the 3,700 level, these are all reflective of the levels that I gave you just a moment ago. But again, it just reinforces those levels. I talk about this all the time in our live trading room, that every single day, at the start of the day, I give my levels that we're looking at as support and resistance areas. And then at the end of the day, I come back and I look at the price action during the day and I see, number one, did the market recognize my levels and did it respect my levels? And, you know, without patting myself on the back too much, the market pretty much recognizes my levels 95% of the time. You can see an order imbalance hit. You can see a hitch, a hesitation when the markets hit these levels about 95% of the time. So they almost always recognize my levels. They don't always respect them. Sometimes it will just continue right on through that. But all we can do is all we can do. And that is finding out where those gamma walls are, finding out where those levels are, setting our initial strike prices accordingly. And then if we need to adjust, we adjust. But again, it will be interesting to see where we're at on Wednesday. If we look at our trading room activity for this week, you know, we did have the Eurozone CPI and GDP numbers come out this morning. They've already come out prior to the market open. They did take some of the wind. They weren't bad numbers, but they did take some of the wind out of the market sales. But as I'm speaking right now, the market's trying to come back up to that 3,900 level. So we don't really have too much other than that on the docket for today. Our core trades for today, we're going to be doing another 0 DTE. Of course, we do one of those specific trades every single day of the week. We'll be reinitiating our IWM weekly credit strangle. That was a fantastic trade last week for us. Very above average for our rate of return that we got on that. And then we'll be reinitiating our SPY and our Q trades. All three of these trades, we're going to look here to take off on Wednesday. We're going to try to pull those on Wednesday prior to the FOMC announcement, and then reapply those if the premium is there. So this may potentially be a double dip week for us on those. Same thing on the 0DTE. We're going to try to get 2 of them out on Wednesday, but just so you know, this is going to be maybe a different week of an experience with these particular trades. We usually have a 4DTE credit strangle on PayPal as well, but we've already taken advantage of some market conditions to roll that out from last week to this week. So it's already in place. Strike prices on it look great. It's already in the profit zone, so we won't be working on that today. We do have a potential Theta Ferry trade. I'm looking at our account right now, and I am up about $80 on our Theta Ferry that we started on Sunday evening. We do start trading here on Sunday evenings. We get a little bit of a jump on the week with our Theta Ferry trade. It's working its way. It's trying to work its way right now into the take profit order that we have sitting there at $100. We'll have to see how that develops here in the next, we're about 2.5 hours away as I talk right now before the cash opens. So we might get there hopefully here shortly. But we'll look at doing another Theta Ferry trade. Man, those have been amazing. Tomorrow, Tuesday, we've got ISM manufacturing number. We've got the PMI on ISM coming out. We've got the Jolt jobs opening. Both of these are just a little bit after the market opens up. It could be potentially market moving, but again, generally we tend to see a consolidating market prior to the Wednesday FOMC announcements. We will be in the scalping room all day on Tuesday, or we'll be there at least until I can make $1,000. Generally, if I can get my daily income goal on scalping is $500 to $1,000. And so when I get into that $500 range, I tend to start to be a little bit more picky. If I get to the $1,000 profit range, then I'll usually quit for the day. But we'll be focusing in our live trading room as well on the 0DTE. We're going to be working on the DIA trade on Tuesday. We have several of those ladders working. And in all likelihood, you saw how strong the Dow has been. In all likelihood, this week, Tuesday, we will not be adding a new ladder. We will just be adjusting existing ladders. So we'll be working on the DIA ladders this week. We may potentially continue to work on our nat gas trade. We've got the put side in. We're starting to work on the call side now. That trade is looking fairly good. We still got a lot of time to go on that. So we've still got some work to do to bring in a little bit extra premium on that trade. We're going to take a look on Tuesday of covering our Zebra trade on FRT, or we might just potentially book our profit on it. That trade is tremendously profitable right now. We'll take a look at the technicals on FRT on Tuesday and decide if we want to try to continue to generate cash flow out of it, or just simply book the profit that we're showing on it. It is a very profitable trade for us right now. Our TSLL trade has been really good. Interesting, obviously. Now, Elon Musk has purchased Twitter, so that could potentially release a little bit of the pressure on Tesla stock. This idea that he may have to continue liquidation of his shareholdings there kind of goes away now. So we'll have to see how that affects TSLL. Man, it's been strong. It's been strong. Of course, the market's been strong too, but that's another situation where we may look to either continue to scale it, or we may just book our profit on that and take our money and take our ball home and go find another trade to trade with. Our XLV cover, we're going to take a look at rolling our cover on that. That trade is in the money now. It's pretty close to max profit on that trade. But I do think there's still a little bit of juice left in potentially continuing to roll the cover on that. So we'll take a look at it on Tuesday and see what we think. Our Amazon trade. So we've already double dipped on Amazon. We traded Amazon earnings. We made money on that trade, and then we came right back in and double dipped on a wheel trade on Amazon. We might take a look at Tuesday at adding the call side to that, bolstering the income potential a little bit. And then last but certainly not least on Tuesday is a potential wheat trade. So big news over the weekend, Russia basically breaking their agreement with NATO on the wheat trade deal that had been brokered there. I think that's going to, I don't think it's going to be a big deal for wheat pricing wise, but I think it does put a substantive floor under the pricing with wheat. Wheat is another commodity that we trade that is unwieldy. It is a little bit tough to trade. You will see your P&L on the trade as you hold it bounce around quite a bit, but it's also pretty tough to find stuff that has the return potential of wheat. So we're going to be looking for a wheat trade setup on Tuesday as well. So should be a pretty busy day on Tuesday. Of course, as the market closes, we'll look again for a Theta Ferry overnight trade. Those have just been gold. Wednesday, we've got German unemployment numbers coming out early in the morning, oil inventory numbers, and then, of course, the big ones. We got the FOMC statement and Powell's press conference starting about 2 hours before the market closes. We will take a look at the possibility this day of double dipping on our 0DTs, starting off the day right off the bat with a potentially low probability, high profit ROI potential trade, maybe a chicken iron condor, maybe a broken wing butterfly, something like that, and then try to double dip later in the afternoon. But this is really going to be our focus, and I love these days because it teaches our members patience. We just sit around for a lot of the day waiting for that statement to come out and waiting for the opportunity to trade. But one of the other trades that we may look at on this particular day is one of our $50 spec trades. We haven't done one of these in a while. They're a fun trade. It's just simply buying a short or a long option, spending no more than $50 on it. And sometimes they can hit, sometimes they don't. But when they hit, man, they're usually a pretty nice one. I think the last one that we did, we turned $50 into $250. And the idea, of course, with these trades is that the only money we put into that trade, the $50, it comes from our profits off of our 0DTE. So we're never putting our own principal in these trades. So we'll look at a couple of little things like that on Wednesday that could be potentially interesting setups. But again, Wednesday is going to be all about the Fed. We'll take a look at a Theta Ferry trade at the end of the day. That trade right there is going to be kind of dependent on what the market does in relationship to the Fed. We want to make sure that we have the stability that we want overnight. And, I don't think we've skipped too many days as we have done these trades. We have 5 days a week that we trade this. Friday is not one of them usually, where we start on a Sunday through a Thursday. I think we've skipped maybe 3 days where we just felt like the premium that we would get overnight versus the volatility that we were expecting overnight was not justifiable. So we'll have to see where we end up on Wednesday. Thursday, we've got a lot of information still coming out that, again, could be a catalyst for the market. We've got ISM numbers, the PMI number on ISM. We've got factory orders, jobless claims, international trade numbers. We've got gas inventory numbers. We do have a nat gas trade on. We need to look at that. All of this stuff is coming out just a little bit before the cash markets open up, or just a little bit, in the case of nat gas, just a little bit after. So it could be a busy news catalyst day on Thursday. We've got a lot on the schedule for Thursday. We're going to be doing a 0DTE, of course. Thursday, we're back in the live scalping room all day, trying to bring in $500 to $1,000. We'll be doing a new gold ladder trade. We'll be doing a new oil ladder trade. We will be putting on a new dragonfly trade, and we will be putting on at least 2 new pairs trades. And then certainly last but not least, we're going to look at some China ETFs. China has absolutely just been beaten up lately in the marketplace. There's a couple of ETFs that have decent volume. They're not the greatest, but they do reflect the pricing that has happened in China over the last little bit. And I think there's some nice values there. We might take a look at a couple wheel trades on some ETFs that track the China market. And then again, a potential theta ferry trade overnight. So that's going to be Thursday, busy day on Thursday. And then Friday, we do have the unemployment rate coming out, and we have non-farm payrolls. Now, we've had a couple of non-farm payroll numbers come out that have been just as explosive to the market as an FOMC announcement. So we might take a look at opening up our live scalping room on Friday to the whole live trading room as well, and be scalping these non-farm payroll numbers in the morning. That comes out about an hour before the cash markets open up. So that's going to be something to look forward to. I'll put scalping down here. Scalping the non-farm payroll number. We've had some good success with that. That's my handwriting, of course, is horrible, but you get what I'm saying. And then Friday, usually it's the end of the week. That means that we're usually worn out. It means that we potentially might have some of the 20 to 30 trades that we've put on the rest of the week needing adjustments or enhancements. So we leave room to do those. And so we really just focus on our 0DTE on Friday. There could be potentially a theta ferry trade depending on the premium. We don't usually do them on Friday. It might be more likely to do a 3DTE, although I thought we had a good chance last week of doing one, and it just didn't materialize. The premium just wasn't there. So there's our activity for the week. Updated performance results. You can see where we're at. Overall, 155 days of 0DTE opportunities. We've done 231 trades. 223 of the 231 have been winners. Almost a 97% success rate. We were batting very close. 98.6, 98.7%. We were almost 99%. And then we had 2 losers in a row, or very close to each other. But nevertheless, still an absolutely knock it out of the park win rate. Very proud of that. We look at our other numbers here. 4 DTEs, 117 wins, only 7 losses. That's been great for us this year. Our IWM trades, we call those the millionaire maker trades. I didn't go to math college, as I like to say, but I don't think you're going to get too much better than that. Those are pretty solid trades. Our pairs trades, we do have just one working now. We're down to just one pair trade right now. And so we've got 23 trades in, just one open and still working. So all of them are in the profit zone. The one that we still have working is in the profit zone. It just needs to expire. We've got a cover on that one. Our bear trade, 67 winners, 3 losers. Those have been very successful for us. We're working a couple of short positions right now. We'll continue to work those this week as time allows. I didn't mention those in the weekly trading journal. Positive Vega trades, we're up to 8 of those. All 8 of those have been winners. No losers as of yet. Scalping from last week. We didn't scalp on Tuesday. I had some meetings that I had to attend. But Thursday was an amazing day. $6,000 profit there. That was fantastic. And then the Dragonflies, 5 total. And we've had 5 winners, 5 losers. Theta Ferry trade, 34 total trades. About 33 have been winners. 1 has been a loser so far. Gold ladder trades have been doing well. Oil ladder trades have been doing well. All of those are very, very consistent in their results. Our AST program, that's our investing program, is basically outpacing the market by 100% this year. Market's down about 20%. We're up about 20%. It's been a great year for us. So updated results on our AST program. Again, we're doing it about, the key here is we're outperforming by almost 100%, but this is the real key, doing it at about 50% less risk. We do have a guarantee to check out our program if you're interested in either of our programs. If you're interested in our live trading room, where we do about 20 different strategies, as you've seen, plus the 0DTE. We have our investing program, which is AST. And we have our scalping program, which we scalp the E-minis on Tuesdays and Thursdays. If you are looking at the live trading room, it's good for experienced traders. It's not good for new traders. You need to know how to trade. You need to know how to adjust your account. You need to know your system that you're trading on. But if you want to move beyond 0 DTEs, if you're someplace where they just trade 0 DTEs, and you want to try to get a more complete business plan, a system, so that you can say, hey, on Thursday, on Friday, on Wednesday, I know what I'm going to trade. This is probably a good place to look. Again, we have a 200% guarantee. If you get in the program, you try it for free for a week, you sign up for a month, you go through all our trainings and do everything that the trainings ask of you so that you're maximizing the program, and you don't think at the end of 30 days that it was the most amazing trading room you've ever been a part of, I'll give you a 200% back, double your money back on your monthly subscription. So no reason not to give it a try. The asymmetric system, that's for investors, not traders. It's a passive system, takes 5 minutes a day, 2 to 10 simple portfolio adjustments. It doesn't take too much work. It's a set it and forget it plan. It is designed to make some good money, but the primary goal is to do it at less risk than the marketplace. So if you're concerned about risk, if you're concerned about the market being down and in a bear market, this might be a good solution to that. If you're also just impressed with results, I think our results speak for themselves. I don't need to talk too much about it. We absolutely obliterated the market in 2021, and we're beating the market by a greater percentage this year than last year. So I think that speaks for itself. That's our investing program. Scalping is great for someone that is a full-time trader and has the screen time to stare at their screen all day long. It's also great for the non-full-time trader. It's great for the person that says, you know what? Look, I know that non-farm payrolls is coming out this week. I know that the FOMC statement is coming out this week. Those are two opportunities right there that is everything a scalper needs. And there's going to be a 20-minute window, usually 20 to 30-minute window when those announcements come out that give you the volatility to make your profit. And then it's just up to us to capture that profit. But you don't need to be sitting in front of your screen all day long to scalp. If you could devote 20 to 40 minutes a week, you can find an opportunity. So scalping might be that something if you're looking for daily income. That's my goal, is about $500 to $1,000 a day in income from scalping. If you want to try our live trading room, that's the place to go. Try 0DTEforfree.com. You can try it for free for 7 days. Hang out with us, ask questions, see our trades, talk with us. If you want to try the investing program, it's tryastforfree.com. And that, again, is a passive investment asset allocation model portfolio. If you want to come scalp with us, just go to tryscalpingnow.com. And again, there's no guarantees in the marketplace, but we're trying to garner $500 to $1,000 a day in that trading room every Tuesday and Thursday. That's our overview for the market, guys. It should be a busy week. Again, looking forward to Wednesday. We'll see you soon.